so you don't get confused, because it is just a route. Like if you are taking a gateway route, and like you have done MBA, or on some other on the basis of some other qualification, if you have got some exemption and you took the gateway route, so that then you will call it like a gateway case study exam. Otherwise, the management case study exam, gateway case study exam for the management level, it is same thing. Now, this is a very important instruction that has been given on the first page of your pre-scene, and the information is that the COVID-19 statement. And what does this statement saying? That this pre-scene and the case study in general, while aiming to reflect real life or set in a context where COVID-19 pandemic has not had an impact. So now this is a qualifying statement. You should not be pulling all of your answer and linking them with the pandemic, right? If a situation that has been given in the question is asking for something which is related to the pandemic, then yes, you can do it. But you should not be linking your answers with the pandemic situation, because you should assume that your company is operating in an environment where there is no pandemic situation, right? So remember, marks in the exam will be awarded for valid arguments that are relevant to the question asked. Answers that make relevant references to the pandemic or social distancing will, of course, be marked on their merit if it is relevant. Like the question, unseen question, is asking for such a situation where there is a pandemic, so then you might be discouraging the physical meetings and all those things. Otherwise, you should not be like unnecessarily wasting your time and energies explaining and linking the situations with the pandemic thing, right? In most cases, however, candidate may find it helpful to assume that there are no restriction to the movement of people, goods, or service in the place. You understand? Like if an unseen situation, you have been told that a delegation is flying from one country to the other to attend and to participate in a training which is being conducted by the training, and you give a statement that they should not be flying because the flying could spread the pandemic, coronavirus. There are restrictions flying, various restriction on air travel. The countries, they have restriction on their on their borders. They don't allow the people to come. Those all arguments are going to be irrelevant. So keep this thing very clear in your mind, right? Because your company is not operating in a pandemic situation. Now, in your study, the second page is about the table of content. Is here all of your case studies, like the management case study, strategic case study, the presentation of the pre-scene is almost similar. They would be giving you an introduction and introduction about the about the case study, your position in the company, and then they would be giving an executive introduction of the executive training industry, like that will get you comfortable with the overall situation of the industry. Like I felt that you need to have more information to understand the executive training industry. That's why I have get you through that additional material. Normally I don't do that because certain type of industries are like very uncommon and students don't know much about the dynamics of those industries. So I felt this is one of those industry. That's why I have given you a brief overview of the company, and when we would be talking about the industry analysis in more detail, I'll take you through the history of executive training industry and how it has evolved over the time and where it has reached today. And this all information would be to give you the broad idea and understanding of the industry, so you could place yourself and the company, your company Trayyner, in the whole the whole situation. Then it would be giving you the information about Trayyner, and Trayyner is the name of the company. And you should remember that the spellings, although spelling doesn't make any difference, but they have just converted those the trainer spelling of the trainer with a little tweaking to make it a name, right? So marketing activities, they would be discussing about the how the company is promoting their products, then the course locations, and then trainers, their resources, the guys who are like imparting the training, course managers, topic managers, and the courses. Like these are all the relevant, the information. When we talk about a training, what comes to our mind? A trainer, a course. What would be the outline of the training? Like when we started the sessions here, I gave you a outline that was telling that what we are going to cover during our these coaching sessions. So similarly, when you are going for a training, it would be intended for some specific purpose. So there would be an outline, and then you must have seen that the course trainer is imparting the training, but then there is a course manager uh, which would be handling the registrations. And in universities, you must have seen that the registration or the admission department is managed by the different people. So there would be a manager who would be taking all the registration forms and processing your registration with the university. Similarly, in training organization, there is a manager who would be actually managing that, the whole thing. The trainer himself would not be too much involved in managing the course itself. He would just be conducting the training. Then the topic manager courses, like what kind of courses. There's a plethora of courses which are being offered by the training. Um, and then the trainer's management structure, as Walid has already explained us a little bit, that this company has a very simple kind of management structure. There are two, the two top management. There are only two people in the top management, and those they are like I believe their sister and brother. The pioneer, they started this company, so this is a kind of advantage for this company. And this is an unquoted company, so they own the shareholding in that company. There was another interesting fact you would study, that they hold just the 10% of the company. The rest of the shares are held by other people. The trainer's business model, how they are creating the value, and then you would remember that you have already studied about the business model. So costing information, and then extracts from trainer's annual report, that is the financial information. Then the master classes in another company which is a competitor of trainer. This information has just been provided you to understand that what the position of financial position of its competitors, right? So you would see that how big your company is from the revenues. You could judge that what is the size of the trainer compared to the size of the master class. If you would look at the assets in the balance sheet, again that will give you an idea about the company size. Then there are news reports, and then extract from Grumpy Trainer's blog, right? So these news reports and blogs would be giving you some feedback or some information about the environment. As Walid mentioned, that there is a news that one of the telecoms minister is concerned that why they have spent the money on the training and what they actually have achieved out of it, right? So the introduction, in the introduction, Trainer is an unquoted company that offers executive training courses. Now, executive training courses mean those courses are for the management people. Those are not the technical courses. So unquoted company, what could be the advantages of the unquoted company? Its reporting requirement, as we have studied in the first chapter of the F2, first or second chapter, when we were studying about the financing facilities. We were looking at the various options to finance a company. We studied that what are the advantages of a quoted company. So similarly, the advantages of the quoted company, if you are not a quoted company, those becomes the disadvantages. So what actually is the advantage of you don't have to comply with the stringent policies, and I explained you during that session the reason for not having the stringent rules for the reporting is that if you are not a quoted company, it means that there's not so much public interest. There are a number of the shareholders are there, but those are few in number. If you are a quoted company, your shares are floated in the market, so public would be buying those shares, they would be trading on those shares, so that put the interest of the public on stake. So to ensure the interest of the general investor, government developed certain rules through their security exchange commissions, that like your company should be presenting the information in a transparent manner, so whosoever would be investing in your company should have a better insight about your company. Less compliance cost. Obviously, if you are a quoted company, you will have to do the audit through the audit firm, and then you need to have a lawyer, legal, a guy. So that involves a lot of cost. And what are the disadvantages? Limitation in raising the finances, because you are not a quoted company, you cannot float the bonds like to raise the loan through the stock exchange. But even if you are not a quoted company, you do have the facility of raising the finances through the banks. But banks would be charging you a little bit higher. And the reason is, no, you should remember all these things. If you want to write somewhere, some of these things might not be written here because it is not possible to put everything here. Like as I'm telling you that the loan would be a little bit expensive for unquoted company, because their report uh, doesn't tell the clear information of the financial health of the company, because those reports are not in compliance with the regulatory requirement. Whereas if your company is a quoted, you are already complying with the regulations. So the information that has been presented in your financial reports would be giving insight to the banks about the health of your company. So that's another point you should remember, that unquoted company normally, if they go for financing from a bank, that's going to be expensive. And the other disadvantage is for the unquoted company. Another disadvantage is like they can't raise the finances through the equity. They cannot float their shares. So and less public awareness, difficulty in company valuation. That's another aspect. Like if your company is quoted, your share price would be giving, I mean, information about the company's capitalization. Uh, but if you are not quoted company, then it becomes a difficult job to evaluate. There are evaluate the value of the company. Also, there are the ways which could be used to value the company, but those are a little bit difficult and lengthy, right? And then the company is based in capital city in Northland, but it offers its courses at several international locations. So another thing about the company is that what could be the issue involved if Trayyner goes for listings, such as valuation of the company, earning per share, how its earning per share would be affected, financial reporting issues, dilution of the ownership, right? These could be the issues. Like currently there are a few investors in that company, like the shareholders in the company. If you would be going public, that would be diluting the ownership. um, so the company is in a capital city, based in capital city. We would suppose that the people have a good purchasing power and are technologically aware. In developed country, working conditions are generally good, and most of businesses are in growth or in maturity levels, right? When we talk about a capital city, the purchasing power of the people in capital cities is comparatively better than the other parts of the city. But our company is not operating only at a city level, it's an international company. So when we talk about the international business, it means that the company is exposed to currency exchange risk. Therefore, concept related to currency rate, hedging, and translation loss becomes relevant. Hedging is, you might not see a question about the hedging because that's something which is more related to the P3 risk management of strategic level of CIMA. But still, you need to have an idea that what kind of risk it can pose to your company. So Northland is a developed country. I have told you that what are the things associated with the developed country that has a high standard of living, and the country has an excellent higher education system with a relatively high proportion of its population holding undergraduate and postgraduate degrees. So this tells like the quality of workforce with sound education base indicates high expectation from the courses, right? So your customer is sophisticated, and you need to take care of the quality of the services, right? And one way to ensure the quality is to get a feedback, as I have already explained you while we were getting through that supplementary material. The feedback in the training is so important. So educated population shows that demand conditions are good. We could apply that Porter's diamond model, which talk about the demand conditions, supply conditions, some other aspects. I think we have not studied it yet. So once you will study it, then you would understand that how we can apply that model here in this situation. Okay, Northland's currency is N dollar. Northlandian company law require companies to prepare their financial statements in accordance with international financial reporting standards. So this is the standard statement you would find in every case study, because this CIMA syllabus is following the IFRS. In F2, all the concept you are studying about the financial reporting study are international financial reporting standards, right? So other one is the gap, like generally accepted accounting practices, that is normally applicable there in America, North America, and some of the country in Middle East also follow the gap. Like, and you are a financial manager at a Trayner's head office, and what would be the generally the responsibility of a financial manager? You would be responsible to prepare the financial reports, project appraisal, management reports, leading the team, stakeholder management, etc., etc. Right? So you would be doing all these things being the financial manager. Your primary responsibility are associated with management accounting, and you report to um, Zudzi Tsikata. Okay, so the senior financial manager who report directly to the CFO, right, finance director. So whatever you would be producing, that would be routed through your boss to the finance director, and probably that would be a report for the top management or the board of director. They don't have actually the board of director. You would see that there are only two people. One is the CEO and the other one is the chairman of the company. So this is the introduction of the company, and we are already like it's 1:30. So Daud, could you please stop like recording?